What's up, you guys? It's Paul here, and welcome back to the 9 to 5 Investors Club channel. Okay, in this video, I want to give you another quick update on what happened in the stock market today. We saw a major pullback in pretty much all the indices. We saw that the S&P 500 dropped by 2.37%, Dow dropped by 1.92%, and NASDAQ with all the tech stocks dropped the most by 3%. Okay, now yesterday we saw a bit of an uptick right after we bounced off of one of the previous highs before. It looked like it was pretty much, we were doing okay. Yesterday, tech actually did pretty well, but now we're seeing another major pullback. And the reason, in my opinion, is because when the Fed spoke yesterday, we didn't exactly get a very optimistic outlook of how we're doing from a fiscal stimulus point of view. You know, the stimulus check is nowhere to be seen anytime soon. I don't think that's really going to come out anytime soon either. And any changes to the interest rate is not going to have as much of an impact anymore as it did previously. And so there's just not a whole lot of optimism left among investors as to why the stock market needs to go back up again. Okay, so I feel like most of it is being the fact that there's no more fiscal stimulus anytime soon. There's no news on a vaccine for the coronavirus cases. Interest rates are not having much of an impact anymore. In fact, even if you look at the coronavirus cases, they started ticking back up again, and a vaccine is still nowhere in sight. Okay, I was also looking at the Spanish flu cases, and it's starting to look scarily similar here, where we did see a huge second spike, like we saw here, and it started coming down, and then we still saw another third spike here, which we might see again. Okay, there's we don't know yet, we have to keep an eye on it, but as of now there is still no vaccine, so there's no way we can feel confident that this is going to go away anytime soon. Okay, so things like that, different things like that, are what is really affecting the market right now. The fact that there's also an election coming up. Historically, the 1 or 2 months leading up to the election is always pretty volatile because different people have different expectations. Some people, prefer a certain president to win the election, hoping that would help businesses a lot. So, all that uncertainty will eventually lead to a lot of volatility leading up to the election. Okay, so that's the reason the stock market has been so volatile lately. Now, in terms of different levels that I'm watching, previously I told you about how if we break down the 50-day moving average, which is the green line here, we might see a much bigger drop, and that's kind of what we're seeing here. We temporarily bounced off of the high here about 2 months ago in July. And but obviously that was not a strong enough support, so we dropped back down, and now we are back to this previous high before we saw this correction down to the 200-day moving average. Okay, so we stopped just there, we're pretty much at that peak, but we're still seeing a red day in the future, so I'm not really expecting much of a bounce back even tomorrow, but we still have to keep an eye out for it. We have the 100-day moving average around 319 for the SPY, and then, in my opinion, the strongest support is going to be the 200-day moving average all the way down at $310 for the SPY. And I'm not going to feel too confident about buying stocks, or especially call options, until we see some kind of a reversal off of the 200-day moving average. Okay, so if we see something like this again where it keeps bouncing off and we go back up, that's going to be great news for us. But in the short term, I still feel like there's a lot of negativity that we should look out for, and potential downturn. Okay, so these are the key support levels that I'm looking at. The MACD line is below 0. I told you that's bad news before. It's scarily looking a lot like this here. So let's hope it doesn't go all the way down here, but we would see more of a recovery soon enough. Okay, so like I said, sometimes the best thing to do in a situation like this is actually to do nothing, because if you jump in too early with call options or put options, then you never really know what's going to happen unless there's a strong confirmation of a downtrend or an uptrend. Okay, if you do want to try options, I would only try spreads, out of the money spreads, either credit spreads or debit spreads. That way, if there's any kind of a premium crush in option value, you still will come out okay on the other side. Okay, so that's what I wanted to share with you guys, a quick update on what's happening with the market and why I think it's still going down. And the different levels that I'm looking at. Okay, I hope you found that helpful. Please just smash the like button if you did, and subscribe if you haven't already. Okay, thanks again for watching, and until next time.